Yes, we'll tell you everything that you need to know before you start your day so that you can start ahead of the curve. Let's start with the headlines. More shipping containers, including those of oil giant BP, avoid the Suez Canal route as Houthi militants step up attacks. Now, U.S. Defense Secretary Lloyd Austin announces a new maritime task force intended to protect commercial vessels traveling through the Red Sea. Brent crude gains 2% on Monday and trades above the $78 per barrel mark this morning. Equity markets in the U.S. continue to be mostly positive. Asian markets trade mixed as investors closely watch the Bank of Japan's rate action and the Reserve Bank of Australia's December policy meeting. Japanese, South Korean and Chinese benchmarks trade lower. HDFC Bank concludes the first debt sale after its merger with HDFC. Raises over 7,400 crore rupees via 10-year infra bonds, and that's an NDTV Profit exclusive. Provisional advance tax collections till the 17th of December rise close to 20% year-on-year to 6.25 lakh crore rupees after the third installment in FY24. And Apple will stop selling its Apple Watch Series 9 and Ultra 2 in the US on account of a patent dispute, taking some of its best-selling devices off the market during the busy holiday season. That's a Bloomberg report. Now, the top story of the day. Tensions in the Red Sea continue to ratchet up, and more companies that depend on maritime trade are asking their container ships to avoid the Suez Canal route. The latest to make such an announcement was BP. A task force led by the US and joined by the UK and France, among others, will now patrol the Red Sea as the area sees an increased number of attacks by Yemeni Houthis. 2 commercial vessels were attacked yesterday by Houthi drones in the Red Sea. Remember, major shippers MSC Mediterranean Shipping Co. and CMA CGM announced over the weekend that they won't send their vessels through the route in the face of rising threats, while Maersk Tankers said that it would insist its vessels have the option to avoid the route. You're probably familiar with the importance of the Suez Canal route. It has been discussed in great detail, and that was when a container ship blocked it last year. Basically, it's the shortest maritime route between Asia and Europe, and the alternative is around the Cape of Good Hope in Africa. Crude prices have risen because of concerns about supply, but not to a very large extent. Brent ended yesterday with gains of about 2% and continued to gain a little bit of ground this morning, and it's just at over $78 to the barrel as we speak. Now let's turn attention to the equity markets here in India and take you through all the cues before the start of trade, and we're talking about the F&O cues. Agam is joining in to tell you just that. Agam, you saw foreign institutional investors turn net seller. Some of that, I guess, is going to play out in the numbers. Are we expecting consolidation in the rest of the week?
Yes, we are, Alex. And yesterday was perhaps first indication that we are, in fact, moving into a phase where perhaps markets could start moving sideways and perhaps in a range. And that was indicated by not just FIIs selling in cash markets, but also unwinding in positions as far as your index futures go. So the Nifty futures did see a decline at around 9%, even as the index came off. It was a quiet day for the Nifty. When it comes to the Bank Nifty, we saw the underlying move below the mark of 48,000. And along with that, again, unwinding coming through as well. So some signs now emerging that a lot of traders are now taking off their positions as we move into the final couple of weeks in December. What about your options and universe and what's happening there? So once again, we've been talking about the 22,000 call, and it means continue to see more and more accumulation. It won't be too long before it actually takes over the 21,500 call as the one with the maximum open interest. Of course, on the lower end, we'll continue to see a little bit of support around 21,200, 300 zones. That said, in terms of change in OI, of course, we did see 21,500 calls and puts be extremely active yesterday, and it's something that will continue to be so over the next few days as well. Let's talk about stocks then, and that's where we are seeing longs coming through. For IRCTC, in fact, that one moved up around nearly 13%. India Bulls Housing Finance, Zydus Life, United Spirits, all of them are looking at longs, except for Metropolis, where we saw a little bit of profit taking coming through after a day before. And of course, in terms of stocks we saw unwinding, we saw about a short covering for Dr. Reddy's, Hindustan Copper and Emphasis. Coforge and Hero MotoCorp, on the other hand, looking at longs unwinding coming through. So some amount of profit taking in your broader markets, as well as your some of your relatively smaller IT names as well. And I reckon, Alex, today will also be in what will also be in focus will be the Fin Nifty weekly options expiry, and because of that, a lot of financial names as well will be in focus.
Thanks so much, Agam, for that. And speaking of financial names, let's talk about HDFC Bank. And this is a counter that hasn't moved too much over the last 1 week, but if you look at the month that has gone by, or rather the last 30 days or so, it's gained, well, close to 10%, and that's quite a big move for the HDFC Bank. But the reason we're talking about this is an NDTV Profit exclusive. HDFC Bank has concluded its first debt sale after its merger with HDFC yesterday, and the bank raised over 7,400 crore rupees via a 10-year infrastructure bond. Mimantsa has more details, and this is, by the way, an exclusive update that Mimantsa has picked up. Mimantsa, the reason for the issue and also the context for the issue right now?
Yeah, hi, good morning, Alex. So HDFC Bank has raised rupees 7,425 crore through infrastructure bonds at the coupon rate of 7.71%, a little short of what the lender had originally expected to raise. The bank had aimed to raise up to 10,000 crore rupees initially, out of which 5,000 crore rupees was under the green shoe option. But the bank's first debt sale after the merger with HDFC Limited received 75 bids worth 8,700 crore rupees. So it looks like the banks are optimistic on the possibility of an oversubscription to the issue. But even though macroeconomic conditions currently are favorable in terms of pricing, it is not something that is enticing the investors as much. As a result, some banks are unable to raise the entire amount. So experts at NDTV Profit spoke with us saying that investors want higher yields and the issuers want aggressive pricing. So because the debt market is now flush with several corporates and banks who are tapping the corporate bond market, investors are rather cherry picking. So they are going after a bond issue which is safer, liquid, and also gives higher returns, which are usually the ones by the quasi sovereign entities like NABARD and IRFC and more such. So investors are weighing all the risks and returns from the options that they have before making a decision. And for the issuer, it is probably the best time to tap the corporate bond market, considering that the US Federal Reserve has indicated that they are not going to, they're rather going to cut rates in 2024. Also, the RBI has moved to increase the credit risk weight on consumer credit, has funneled down the capital raising channels for banks, so they have to now move to other avenues to raise funds. But if we talk about the HDFC Bank per se, the fundraise is crucial because they have to now replace the borrowing by HDFC Limited, and it is expected that they are going to continue tapping the corporate bond market in the coming days ahead. But how the response is going to be from the investors, that is something that we'll have to wait and watch, which might be lukewarm in the coming days.
Understood. Thanks so much, Mimantsa, for bringing us those details. By the way, the 10-year benchmark government bond has seen its yield drop from 7.25 or thereabouts to about 7.15%. And this is par for the course because we've seen bonds across the spectrum, across the globe, falling after the Fed's latest policy action. Let's stick with banks, though, and talk about Motilal Oswal, which has come up with a fresh report saying that public sector banks are well poised for a re-rating. Mihika is joining in to tell you why that is. Mihika, morning. up? What are you picking up from that report?
Good morning, Alex. So yeah, earlier in Jan, Motilal Oswal had come out with a report, citing that the underlying earnings traction and quality of the public sector banks was well positioned to sustainably deliver 1% ROA, but seemed aspirational at the time. However, the operating parameters of the private sector banks in the brokerages coverage has improved, and it's brought the profitability to 91,200 crores in FY23 versus a loss of 29,500 crores in FY18. Now, 5 out of the 6 public sector banks have achieved the 1% ROA mark, with Select guiding a 1.2% ROA FY25. But according to Motilal's forecast of FY25 ROAs, they remain range-bound of 1.0 to 1.1%, which does imply a scope for further upgrades. Now, in terms of the earnings estimates also over FY23, FY26, it's an earnings CAGR of 24% versus the 19% for private banks. And Motilal expects that the public sector banks are going to continue their earnings traction on improved loan growth, margin stability, and controlled credit costs. Now, there are also various factors. The public sector banks have, reported sluggish deposit growth over the past few years, but the last few quarters have seen some revival, and Motilal expects a 10% CAGR in deposit growth over FY23 to FY26. Additionally, it also says that the banks are well positioned in terms of liquidity because all of them are above the LCR regulatory requirement of 100%. In terms of margins, H1 did see the private sector banks have some margin expansions. However, the banks will benefit as a significant portion of their loans are linked to the MCLR with the 6 to 12 months tenure, and this will lead them to report resilient margins. In terms of asset quality, post COVID-19, the asset quality has been steadily improving, and Motilal expects the asset ratios to improve in the coming quarters, which will also keep the bank's credit costs under control and in the end support the overall profitability.
All right, thanks so much for breaking that down for us, Mahika. And State Bank of India, by the way, was something that we spoke about just yesterday on the editor's cut. Now, let's shift gears and talk about the QSR space. Devyani International is planning to acquire 274 KFC restaurants in Thailand through its Dubai-based subsidiary. The acquisition is facilitated through a share purchase agreement with Restaurants Development Co. Mahima is joining in to tell you more about that. Mahima, quite a significant increase in the number of outlets for Devyani.
Right, Alex. So if you see, the acquisition will be taking place through a Dubai subsidiary of Devyani International Limited, which is Devyani International DMCC, and they're going to acquire 93% in a company called Restaurant Development Company Limited in Thailand. Now, if you see, this acquisition aligns with their core strategy of geographical expansion. Devyani is set to expand its footprint in Thailand via this company. And if you see, the deal is worth rupees $129 million almost. And for this, they have aligned their forces with Camus Investments, which is an affiliate of Temasek Holdings. Now, if you see, the acquisition is done for rupees 6.7 billion, where 3.4 billion approximately will be lent by the Indian parent, that is Devyani International Limited, and 3.3 billion will be lent by Temasek. We had an MK report on Devyani International, which maintains a reduced price with a target price of 165 rupees. Also, the stock performance, if we see, the stock performance for Devyani Limited has remained pretty much muted. Its YTD returns is hardly 1.8%. So overall, if you see, Thailand has a robust poultry market and a very high level of meat consumption. So this can be a very good news for Devyani in terms of geographical expansion.
All right, we'll see how that pans out. Thanks so much for bringing us those details, Mahima. We have to slip into a very quick break, but we've got a good information to tell you about in the realty space, so do stay tuned for that. Welcome back. You're watching All You Need to Know. Let's talk about the realty space, which has seen stocks gain very substantially over the past several months. In fact, the Nifty Realty was at a 14-year high on the 15th of December, and the index is up as much as 72% this year among the top sectoral performers. Now, my colleague Anushi Vakaria is joining in to tell you more about why we've gotten to this point and also some key details about the fact that a few of those constituents, despite the fact that they've gained so much, still could potentially have a ways to go. Anushi, what can you tell us about this?
First of all, morning, Alex.
Morning.
So Nifty Realty, as you know, has been one of the best performing sectors so far in the year. As you correctly mentioned, about 72% gain, which is quite significant. So if we look at the factors to be considered on why realty is in focus, two major reasons stand out. Firstly is the industry consolidation that is taking place. With the RERA in place, the resurgence of branded players is bad, leading to the unorganized players who can't comply to the RERA regulations to fall back. So branded players mix has continuously been increasing. So that is one significant factor. If we come to the second factor, there is a lot of launches that have taken place and the pre-sales growth momentum has been quite significant. So even if you look at the launches in the luxury spaces, if you look at that, has also swelled up quite a bit, which has led to even better realizations. So that along with the pre-sales, in pre-sales growth also, if you look at Puravankara especially, that has posted about 102% growth. Now coming to the yearly stock performance compared to the companies, most of these companies have presented about 60 to 70% returns, with DLF, Godrej Properties and Oberoi Realty marking their fresh highs just on this Friday, December 15th. If we look at the all-time highs, December has been a really good month for realty stocks like Macrotech, Oberoi and Brigade making the cut. Now, with the stock performance in one play, we have to also consider the PE valuations which are taking place. With most of the, if you look at the PE valuations, most of them are trading at about 60 to 70x of the 1 year average, which is in a mixed view, like the 60 to 70x for some. Over here, we have DLF, Mahindra and Prestige, which are above the 3-year average PE. Whereas if you look at Oberoi, Phoenix, they are still below the 3-year average PE. So there is still some growth for this one as well. If we consider just Monday session, the realty stocks did take a breather with about DLF, Oberoi and Godrej being down, which were the top gainers and marked their 52-week high on Friday. Now, if we are to consider what next should we look for the realty sector, there are three key themes which we can play at, which is one is the expected interest cuts, which will again lead to better for a real interest rate sensitive sector, which is real estate. The second is the expected launches that are to double in the second half of the fiscal, again showcasing a strong pre-sales momentum over here. And third is the resurgence of joint development projects that the top branded players are making with each other. So that would again lead to a higher market share for these branded.
All right, thanks so much. So you've laid out quite a few very important points to watch for. Thank you so much for joining in and giving us that perspective. A couple of those stocks, as was pointed out, are still below their 3-year average forward multiples, price to earnings. Let's talk about a few stocks to watch in trade then. And we've got the shares of KPI Green, JTL Industries, as well as Cadent Technologies, as well as Apollo Tyres, all of which Varsha will tell you about. Varsha, what can you tell us about these?
Good morning, Alex. So let's start with, there are a couple of companies who are raising funds. So let's start with KPI Green, where it opens QIP for raising almost 300 crore. And it has set the floor price of rupees 1,245 a share. Now, this floor price indicates discount of almost 9% to stock's previous close. Then we have JTL Industries, which is about to raise almost 1,300 crores via warrants and QIP. Now, they'll issue almost 3 crore warrants at an issue price of 270, and remaining 500 crores will be raised via QIP. Now, the company will also invest up to 1,200 crores in JTL Tubes, which is to set up a project in Maharashtra, and funds will be sourced partly from internal accruals and remaining from proposed issue proceeds. Then we have Cadent Technology, which has launched QIP to raise almost 1,400 crores. Now, floor price is set set at about almost 2,400 per share. Now, floor prices at a discount of 5.8% from its previous close. And also, they've got expansion plans. So, this is the reason they have raised QIP. So, they propose to set up OSAT facility in Telangana. Then lastly, we have Apollo Tyres, where Warburg Pincus entity White Iris is likely to sell almost 3% stake. It sees almost $100 million via Apollo Tyres stake. Now, if you see, the floor price is set at almost 440 per share, which is at a discount of 3% to current market price. And if you see, the current stake of White Iris investment is almost 8.04%. Now, if one has to see the valuation of Apollo Tyres with respect to its peers, MRF is the most expensive stock, trading at about 65 times its earning and a premium of its 5-year average, and Apollo Tyres is the cheapest amongst all. And lastly, if you see the stock performance of all these companies, JK Tyres and Industries has surged almost 98% during the last 1 year, followed by Apollo Tyres and TVS Sri Chakra at 37% and 40% respectively.
All right, thanks so much, Varsha, for bringing that down for us. And by the way, we will talk about Apollo Tyres in a little more detail on the editor's cut, so watch out for that later today. Let's talk about a few order wins that you should know about, and we've spoken about ethanol and the sugar space quite a bit. So it's interesting that India Glycol has gotten an order to supply over 16.65 crore litres of ethanol, and we've also got Sonata Software, which announced a collaboration with Bayer. Anushi's got more details on this. Anushi, what can you tell us?
Again, hi Alex. So first of all, I'll start with India Glycols. So India Glycols, as you mentioned about the ethanol space, it has received an order to supply ethanol for about 16.55 crore litres at a value of 1,164 crores. Now, this is mainly to supply ethanol for two parties. One is your OMCs, which include BPCL, IOCL and HPCL for about 896 crores. And the second one is the energy companies, your Reliance and Naira Energy, for supplying about 3.75 crore litres for a consideration of 268 crores. Now, this supply of ethanol will take from its grain-based plants, which have a better realization, and the company has been expanding in this space. Next, moving on to Sonata Software, the company has announced its a collaboration with Bayer, which will help it to upgrade the agriculture sector for the farmers. So with this, the company aims to bring down the technical cost that is required for the farmers' agriculture. Now, the business has lined up its goal to achieve about $1.5 billion of revenue by FY26 compared to $0.92 billion in FY23. So definitely you have to keep a watch out for this one. And lastly, we have PNC Infratech Limited, which has emerged as the lowest bidder for the Madhya Pradesh project for a consideration of about 1,174 crores. Now, this construction is for a period of 24 months and is to be executed within 24 months. If you look at the company's order book, that stands at about 18,000 crores. So again, this one should be a watch.
Clearly. All right. Lots of stocks in the secondary market to watch out for, but also quite a bit of action in the primary market as well. We've told you that there are several companies that are making a beeline for the bourses, and we've got 3 IPOs that are opening up today. Inox India, Moti Sons, as well as several others that have seen significant subscriptions, but there are 3 more, like I said, that are opening for subscription today. We've got Saloni joining in to give you some more details on that. Saloni, take it away.
Hi, Alex. So as you mentioned, many companies coming up with their IPOs, especially this week. We have about 8 companies that have come up with their IPOs. Inox India, for that matter, was subscribed over 61 times, led by QIBs and NIAs. And also Moti Sons and Muthoot Microfin, I want to mention that retail investors' portion is something that was fully subscribed on day 1. So we have to see today if if they are fully subscribed today. Now, coming to the 3 IPOs that are opening today, one is Happy Forgings, second is RBZ Jewelers, and the third is Mufti Owner Credo Brands. So Happy Forgings is priced in the range of 800 to 850, and it is expected to raise about 500 crore. When we talk about RBG Jewelers, it's priced in the range of 95 to 100, and it's expected to raise over 750 crore. And Mufti Owner, that Credo Brands that is opening, it is priced in the range of rupees 266 to 280, and is expected to raise more than 500 crore. So lots of action happening in the primary market, and we do have to see how these subscription numbers look like.
All right, and we'll touch base with you when you have more details to tell us. Now, that brings us to the end of this edition of All You Need to Know, but there's lots more to talk about over the course of the next 1 hour or so, just before the start of trade. You'll find all of that on India Market Open. Do stay tuned. This is NDTV Profit.